Morning, everyone. We're just going to wait a couple minutes and we'll get started at 11 o'clock. We're just going to wait a couple minutes. We'll start at 11 o'clock. We're just going to let some more people get on the webinar.
Oh, okay.
Hello, we're currently on mute. We're going to get started at 11. We're just going to let some more people get on the webinar, the broadcast, and then we will get started.
Hi, good morning, everybody, and welcome to our webinar today, Introduction to Single Audit. My name is Linda Scafiro. I'm a partner here at Brinker Simpson, And my focus here is on audit and attest and tax preparation and compliance services. I serve clients in many industries with a concentration of healthcare and nonprofit organizations. Our firm, Brinker Simpson, we are a full-service public accounting firm. We're about 50 members strong. We're located in Springfield, Delaware County, and our services that the firm offers include audit and attest, tax preparation and compliance, outsourced accounting, fraud and forensic services. Our presenter today is James Trubenbach-Byrne. James is an manager in our audit department. James joined our firm last October. He came from a much larger firm. James has over 7 years of experience serving governmental, nonprofit, and healthcare organizations. He is very familiar with all aspects of government auditing and compliance. He served as an independent auditor, as a consultant, helping organizations implement internal controls, and also has worked with state, local, and federal agencies assisting with audit and compliance. In addition to all that, James holds the intermediate single audit certification from the AICPA. With that, I'm going to turn it over to you, James.
All right, we'll just start with a general disclosure. Nothing we're going to go over today is any specific tax or legal advice. This is our interpretation of the rules, particularly what the guidance is as of this moment for the various COVID-19 programs as we get to those slides. Please use the question and answer box to ask any questions, as we may not see questions asked in the chat section. After the presentation, we will be emailing you the slides as well as a link to the current version of the compliance supplement. And then also please refer to our website, brinkersimpsoncares.com, as well as subscribe to our LinkedIn page for updates. As updates are available, we will be posting them to both the Brinker Simpson Cares page and our LinkedIn page. So our agenda today, we'll cover the single audit basics. We'll do a review of the compliance supplement. We'll do a review of the COVID-19 programs and the single audit implications. We'll talk about how to be prepared for a single audit. And finally, we'll do a walkthrough of the various compliance attributes and what they mean in sort of plain English, along with some internal controls that we'd expect on a minimum basis. So to start, we'll kind of go through some of the basics. So who is required to undergo a single audit? So any entity that receives and expends over $750,000 of federal funds in a period that corresponds to your fiscal year would require a single audit. The type of organization receiving the funding typically does not change your single audit applicability unless it's a carve out for a COVID-19 program. So that means whether you're a for-profit, not-for-profit, or government, that $750,000 threshold typically will be what would require the single audit. In terms of expenditure of federal funds, this would include lost revenues for the COVID-19 programs. And in terms of expenses, this would match up with the entity's type of accounting basis. So if you're a cash basis taxpayer, it would be expenditures on a cash basis. And if you're a accrual taxpayer, you would be looking at expenses that were not only paid, but also incurred as of the end of the year. So who performs a single audit? A single audit is required to be performed by an independent certified public accountant. The independence rules are a little stricter for single audits. So prior to entering into an agreement to do a single audit, we just have to do additional work to ensure that your auditor is independent. So what's actually included in a single audit? So here are the 4 different reports that you would see within a single audit. So just to break out what each one of these is, the first one is our opinion on the financial statements and the related footnotes and whether they're if they're presented fairly in all material specs with U.S. generally accepted accounting principles. Your second opinion would be on internal controls over financial reporting and other matters significant to the financial statements. That would be any legal issues that we would examine, as well as compliance with significant agreements. The third opinion is our internal control report over compliance. So each different program has the compliance attributes, and as part of that, our testing, you look at not only were you in compliance with those attributes, but also if you had controls to ensure compliance occurred. And then finally, detailed testing and an opinion on whether you were in compliance with your major program.
James, can I interrupt you for a
Yes.
second? I just want to point out that under a traditional financial statement audit, which is what probably most of the people on the call are most familiar with, is we only issue the first opinion.
Correct, yes.
So it's as you'll learn during the webinar, the single audit is much more robust audit and much more testing and more work for the auditors, and also even the preparation for the clients to get ready for the single audit.
Correct, yes. And then there's also something called a program-specific audit. So entities that received funding under one program are eligible to elect a program-specific audit in lieu of doing the single audit. So if you are able to elect a program-specific audit and you make that election, there's no requirement to audit and provide an opinion on the financial statements or on the internal control over financial reporting and compliance and other matters. Some things that may eliminate this as an option would be for healthcare providers that are not-for-profits that received any sort of money under provider relief, as well as under additional COVID-19 testing or COVID-19 uninsured funds. Those would be multiple programs that may not allow you to undergo a program audit. So when should you report funds as expended? Unless it's the provider relief funds, funds are expended in the period that corresponds to an entity's fiscal year end. For provider relief funds, there is a program-specific guidance on when to report these. We did a separate webinar on this. So if you look on our website, you'll be able to access that, and we'll go into detail on the reporting requirements for that fund. And then on the single audit supplement that we'll review later, it also contains that guidance on when to report for that program. A single audit is typically due 9 months from the end of an entity's fiscal year. With the exception of any fiscal year ends through June 30, 2021, are currently under a 6-month extension from the Office of Management and Budget to complete required single audits. So where are federal expenditures claimed? So when you do either a single audit or a program-specific audit, you'll include a schedule of expenditure of federal awards, or CFA. And both of these under single audit and a program-specific audit will also be accompanied by footnotes similar to a standard financial statement that explains the significant accounting policies and various other items within the CFA. Where do the applicable compliance requirements come from? So the Office of Management and Budget releases a compliance supplement on an annual basis, as well as certain agencies will also provide additional specific guidance for their programs. For COVID-19 programs, HHS has their own set of guidance they've been releasing for each program, as well as the Treasury Department has also issued their own guidance. So as you go through the compliance supplement, some of these COVID-19 programs do include the agency's specific guidance in the compliance supplement, just to point you to what you should be referring to. The current version of the compliance supplement to use is the 2021 compliance supplement. The version is the July 2021 version 2, and then we'll include this link later on when we send out the presentation. So this is an example of the schedule of expenditure of federal awards. Just to point out some key things here, it's broken out by the government funding entity. So in this example, you'll see Department of Defense is listed first. You list all your awards from the Department of Defense, whether direct or indirect, and you come up with a subtotal of the amount for that particular department. When you have multiple programs funded separately, you may end up in a situation where you have multiple programs with the same award number, and then you'll come up with a total for that award number in particular. If this was selected as your major program here, this would require an auditor to audit both of these programs since they're under the same assistance listing number. Included in your schedule of expenditure of federal awards, you should include any pass-through entity identifying number so that when you give this report to a pass-through agency, they're also able to reconcile it to their records. And included in the numbers wise, you have two columns here of the amount of any award that you provide to subrecipients, and then the amount of any federal expenditures that you are claiming. As you prepare this, if you come down to the bottom and you realize that this number is under 750,000, then you would not have the single audit requirement. And then to point it out again, it is done on a per award basis and a per department basis, and this would be used by your auditor to determine the single audit major program.
So James, the $750,000 threshold, that's for all programs combined.
Correct, yes. And that's all programs on the federal level. If you are in a state that has its own separate single audit requirement, which would be New Jersey has its own single audit requirement, $750,000 of state-specific funds in New Jersey would also require a separate New Jersey single audit. Here's the example notes to the CFA that we referred to earlier. So this gives a reader of the CFA the ability to reconcile this to the financial statements if they're provided within the same document, as well as their own records. Traditionally, you'll see some government agencies will review your single audit and say there's differences because they're looking at it on a cash basis versus the organization may be reporting on an accrual basis. So the basis of presentations included here so that it's identified what basis we're using to prepare the CFA. There's a summary of significant accounting policies if there are certain items included or excluded. For provider relief funds, we would be expecting to include a note in here that mentions that the provider relief funds on a different period in the financial statements. And then finally, you have a note on whether or not you're electing to use a specific cost rate. We referred to the compliance supplement, so we're going to walk through that now just to give a general idea of that, as well as what one program would look like. So here's the current version of the compliance supplement. Just to kind of walk through what some of the different information is. So part one is just the background, purpose, and applicability of the compliance supplement. Part two is the matrix of compliance requirements. So that's a summary of the awards included within the compliance supplement and the required compliance testing on the different awards. We'll extract that and go over that on the slideshow shortly. Part three, we'll walk through what each different compliance requirement is. We'll include this later on in our presentation in more generalized terms, but if you have any questions on a detailed level, the compliance supplement is here to answer it in more specifics. Part four, we'll walk through an example program. This is where each agency puts out what they want you to audit for their program. So you'll see here each agency has a different section and it's identified by that number here. So in this case, the Department of Agriculture is 10. And then it keeps going through with each program and each award. We're going to continue scrolling down. Part five identifies any programs that are required to be reviewed as a cluster. Traditionally, this is your research and development grants, and certain other grants get grouped together. So you may have multiple CFDA numbers that go into this cluster that would all be required to be audited if that is the major programs included on the CFA. Part six is if you are new to a government arena and you want to get started with internal controls, Part six goes through each different compliance supplement and gives kind of generalized what they would expect on internal controls. We're going to point some of these out as a minimum as we go through our slideshow later on. But this, if you really want to do a deep dive and incorporate stronger or better internal control structures. This is a guide that is provided with the compliance supplement. Part 7 gives guidance for when an award is not included in the compliance supplement. And then Part 8 is various other information. So we're going to take a look at one award on our end just to kind of go through and give some more information. Sorry, 1 second.
I'll stop sharing.
Here it is.
You have to share again.
Get there.
Sorry, 1 second, everybody.
Pesky compliance supplement.
So we'll walk through the provider relief fund and what that program looks
There
like.
we go.
So this award is included in the compliance supplement for this year. It's assistance listing 93.498. As we mentioned earlier here, it has its own reporting requirements. So if you are a June 30, 2021 year end, the report that you just submitted for your funding received from April 10th, 2020 to June 30, 2020 that was due last week would be what goes on your CFA now. And it would include expenses from January 1st, 2020 through June 30, 2021. So it's longer than your traditional year end.
Right. So the CFA numbers are not going to match up to the financial statement audit. I know James mentioned that before, but it's a little confusing. So I think we have to kind of reinforce that. Okay, so we're going to walk through a little bit of the compliance supplement, the requirements for the provider relief funds. So typically there are 12 different compliance requirements. There are no programs that require all 12. Usually it's 6 or 7 at a maximum. So for the provider relief funds, you can see we have allowed or unallowed activities, allowable costs. Anywhere where there is a Y is a yes, that compliance requirement is required. There's a reporting requirement and also special tests and provisions. So for the provider relief funds, the activities allowed, excluding the infection control disbursement, which we'll get to that in a minute. The activities allowed are for preventing, preparing for, and responding to COVID-19. Also, lost revenue due to COVID-19 is allowed reimbursement under the provider relief funds. Some of the specific examples of costs allowed included in the compliance supplement are building or construction of temporary structures, leasing of facilities, medical supplies and equipment, personal protective equipment, testing supplies, increased workforce, and workforce trainings. There are a few different allowed activities for the infection control disbursements. They include cost of testing, reporting COVID-19 test results to local, state, and federal officials, hiring staff to provide patient care or admin support, expenses to improve infection control. And this one is interesting under letter E, cost of providing additional services to residents such as technology so that they can communicate with family members who could not visit in person. So I assume that almost all residential and skilled nursing facilities would have had to make provisions so that residents could communicate with family members as visitors were not allowed. The facilities were in lockdown. The unallowed activities are any activity or any cost that's reimbursed by another program. So for instance, if you had payroll reimbursed by the PPP loan, you could not use the same payroll costs on your CFA to be reimbursed under the provider relief funds.
And that would also include employee retention tax credits. If you're
Yep.
using that base salary to claim the retention tax credit, that would also not be allowed to be claimed for provider relief.
Right, really, it's any cost that was reimbursed under any other program.
Yes.
It has to be a cost that was incurred that there were no other programs that reimbursed it. Under allowable costs and cost principles, this is really general, and it's pretty much the same cost principle for all of the programs, which is the cost must be reasonable and necessary, and any allocated costs have to be allocated on a consistent basis. We're going to move on to the third compliance. Oh, I went past it. Requirement, which is special reporting. So for the provider relief funding, the special reporting is the provider relief funding portal, which James mentioned and which we did a webinar on a couple weeks ago. So the compliance that will be looked at here is the auditors will be looking to make sure the portal reporting was done timely, and also that the numbers reported on the portal were documented, reasonable, and that the supporting and accurate, that the supporting documentation supports that. Whoops. I'll get back to you, James. Sorry about that. The fourth,
It's all right, it's still sharing.
is it? Oh, okay. The fourth, we just can't move it. The fourth compliance requirement is special tests and provisions, which we're not going to really go into this right now because we expect that there may be some future guidance as far as defining exactly what this means and if it's going to be broadened or narrowed.
So earlier we mentioned the matrix of compliance requirements. So this is extracted from part 2 of the compliance supplement. It'll list out each different award within the compliance supplement, and you'll see a yes or no for each different compliance attribute listed from A to N above. So these are compliance requirements that an auditor must review. Y does not necessarily mean it has to get tested, but it means the auditor has to evaluate whether that attribute is direct and material and requires testing. An example of when it would be marked a Y and it's not necessarily direct and material would be procurement, suspension, and debarment. You may have a situation where an entity only charged payroll costs and there's no procurement that was necessary on that award. So in that case, it would be marked as a yes in the compliance supplement, but it's not direct and material, so it would not be tested. And then another example would be for subrecipient monitoring. If you don't have any subrecipient funds on your award, then that would also be something that's not direct and material and require testing. If an award is not listed within the compliance requirements, auditors are typically required to evaluate all compliance attributes. We will make a caveat here and say for the COVID-19 specific programs, we would highly recommend waiting for an addendum to come out to the compliance supplement that gives guidance for those specific awards. We had a situation last year where the provider relief fund wasn't necessarily in the compliance supplement. It didn't have all the guidance out there until recently. So some organizations they did the audit on the provider relief fund last year, and now they're going to have to redo that same audit under the new compliance supplement this year for funds that are now listed on this year's CFA. So we're going to go through now the COVID-19 programs and what we know as of today. So here are the COVID-19 programs that are not subject to single audit: employee retention tax credits, Family First Coronavirus Response Tax Credits, the Paycheck Protection Program loans, any advances received on the economic injury disaster loans, and then economic injury disaster loans that were received by for-profit companies that were not previously subject to single audit reporting. A for-profit entity that would have been subject to single audit reporting would be any sort of research and development companies that, even if they didn't require a single audit, if they would have been subject to a single audit, if they went over that $750,000 threshold, would be subject to single audit. The following programs would be those included here would be subject to single audit: economic injury disaster loans received by not-for-profit entities, government entities, and for-profit entities previously subject to single audit requirements, coronavirus state and local fiscal recovery fund, education stabilization fund. Just some more background information for any funding received through this particular program. Any program that you had funding for under Education Stabilization Fund, they all get grouped together as one major program. So there is about, I think, over 10 programs included within this one program. If you have any of this funding, they're all grouped together for purposes of single audit. The Coronavirus Food Assistance Program, the Community Development Block Grant. Again, this is another program where it has its own special rules. So this is a program previous to COVID-19 that was included within the compliance supplement, and many not-for-profits receive funding under this CFDA number. So what you'll have to do is aggregate what is your funding under a previous CDBG grant that's not COVID-19 related versus the amount that is related to COVID-19 specific funding to determine whether or not that is your major program. Within the compliance supplement, they are marking this as high risk. So if the COVID-19 funding is over 50% for that award, it would have major program determination issues. And then finally, emergency rental assistance. This would be on the entities that pass this through to landlords and to tenants as necessary, not necessarily on those receiving the funds. And then here are the programs that still have uncertainties and of whether or not a single audit would be required. So the first one is the Coronavirus Relief Fund. So within this program, there's new terminology that they added of subrecipient versus beneficiary. So a subrecipient would be required to report any funds received as pass-through on their CFA, and that would be subject to the $750,000 requirement for single audit. But if you're determined to be a beneficiary, then you do not have to put that on your CFA to determine whether or not a single audit is required. We would highly recommend that the entity reach out to whoever passed through the funds to you and let them make that determination. Ultimately, they're going to be the ones who want to see the report. So if you make the determination, say you're a beneficiary, and they ultimately decide you're not, they're going to come back in the future and require you to undergo a single audit, and you may have some issues on that end. So we'd recommend getting it in writing from them, their determination. The next one is the Restaurant Revitalization Fund. The expectation is these funds will be subject to single audit, although no assistance listing has been tagged yet to these funds, and they're not included in the current version of the compliance supplement. There is the potential that this funding goes and is the same as the shuttered venue below, in that for-profit companies, only an audited financial statements required for shuttered venue operators. There's a potential as well for the Restaurant Revitalization Fund that they go that route. For the shuttered venues, if you're not for profit, it will be subject to single audit if you're over $750,000, and then only an audited financial statement requirement for for-profit companies. And then Provider Relief Fund, if you are a not-for-profit entity, you would have your single audit requirement, although they are doing some additional guidance on what requirements are going to be required for for-profit entities receiving provider relief funds. The expectation here is that because of the additional funding that knocked people out from being able to do a program-specific audit, the expectation would be that they're going to go and try to get for-profit entities to follow the program-specific guidance versus having to do a full-blown single audit for for-profit entities, although that has not yet been released.
Any idea when we can expect that?
I'm hoping in the next month or two.
Let's hope.
We'll see. For December year-end companies, we should have an idea by the time you close your books. For June year-end, it's a sit and wait currently onto when that guidance will be released. And then again, we're recommending until they come out with specific guidance, don't do anything with the single audit unless it's in the compliance supplement. So in terms of preparation for a single audit, we're going to kind of go through here some of the policies and procedures that you'd expect to see in place, as well as the supporting documentation that should be maintained for the awards. So the first thing is a cash disbursements policy. So that should cover, first and foremost, some sort of segregation of duties. You shouldn't have the same person receiving the mail, reviewing the invoices, cutting the checks and signing the checks and posting the money. There should be some segregation of duties. It doesn't have to be perfect if you're a small organization, but just try to at least split who approves invoices and posts them versus who's actually signing the checks and issuing the payments. Along with that, you should have some sort of policy in place to review invoices. This would include reviewing invoices for clerical accuracy, to ensure you actually received the services or goods listed on that invoice, as well as we go through the various compliance attributes. If an attribute is applicable to your program, you should have some additional sign-offs necessary. So, for example, there should be a sign-off that says we reviewed the invoice and it was necessary. We looked at the allocation. If it's allocated, it's reasonable. The best way I've seen this done in practice is people just simply print out all the different compliance attributes and the requirements. They staple it to the front and they just initial, and it was approved for each one of these items. And that serves as the documentation for that you reviewed and approved for all the different compliance attributes. For payroll processing, again, you should have some sort of procedures in place to have one person processing payroll and one person approving it. If possible, you should try to maintain documentation for the rate of pay you're paying people, that it is approved. And then any sort of time that's allocated to multiple locations. So if you have more than one program or more than one location, you should maintain timesheets or effort reports to show what was charged to the federal reward and that time was reviewed and approved, versus if you do have everything as direct charge, you should just maintain some sort of memo to that effect that it was direct charge in lieu of any sort of allocations. For cash receipts, this is going to go more in line with the actual billings and financial reporting. We'd recommend that you maintain your general ledger system in a way that you can rerun the reports if necessary to show what was billed to the government agencies or what was claimed within the awards. So for this, we'd recommend in QuickBooks, if you use different class functions to say this was PPP, this was ERTC, this was my COVID-19 program 1, this is my COVID-19 program 2. That way you can rerun the reports as necessary to show what was in theory billed to the various awards and ensure nothing was double charged. So for procurement, you're going to want to have a documented formal policy, what the steps of procurement look like and at what different dollar thresholds and who should be doing procurement. So there's different levels of procurement, and if anyone is curious as to what a sample policy looks like, we can help provide an example of that. But in general, what you typically see is $10,000 or below. You'll have a simplified method where the organization will go out and they'll just try to spread out their purchases. There's no requirement to do sealed bids or any sort of bidding process. Over $10,000 and under a certain dollar amount, you'll go out and, let's say, require 3 bids that will be reviewed. We'd recommend having some sort of documented criteria on which you'll review the bids against. And then if you're not selecting the lowest vendor, we'd recommend formally documenting what criteria did they not meet to say they're qualified to provide the service. And then in terms of supporting documentation, keeping all of those bids and your criteria as a packet together. And then over a certain dollar threshold, typically we see about $250,000 is there is a large purchase threshold where you would do formal sealed bids. You publish that in a newspaper, and you do additional procedures to ensure that it was a fair bidding process and that it was communicated to the general public. You see that more on entities buying large equipment or on local and state governments who have large contracts. And then finally, your procurement policy should spell out that you're going to exclude conflicts of interest and how you're going to identify those. The best way to identify conflicts of interest is our next recommended policies and procedures is to have a formally documented conflict of interest policy. This should just document a policy where you go about how to identify all the transactions that occurred with related parties or could potentially be construed as not an arm's length transaction. If these transactions aren't charged to the federal award, it doesn't necessarily mean you can't enter into those, but you just can't use them for procurement or to charge the federal contract. So an example of this would be if you have a separate entity that owns the building and charges rent to a subsidiary, if you're not going to claim those costs for the program, that's okay. But if you are going to look to claim those costs on a federal award, each agency does have different rules for it. So there may be an exception where you are able to claim it, but in most cases, you would not be able to claim that. And then finally, as mentioned, your financial reporting system, you should have a policy and procedure in place to formally close the books at the end of the year and reconcile the different programs back to what you claimed and to ensure that there's no costs that were charged twice. By charged twice, meaning that if you have $100 of payroll, only $100 was charged to PPP, ERTC, and the federal program versus going over that specific direct costs. If you aren't able to maintain something within your general ledger and financial reporting software, we'd recommend having some sort of Excel schedule or some sort of way to maintain it so that you see here's all the direct costs that were incurred, and then here's what was allocated to each different award, and then the basis for allocation. That way, when an auditor comes in, they are able to review the initial source transactions as well as the associated allocations to ensure there's no double dipping.
Right, and have that schedule tied back to the GL accounts. Correct?
Yes. So I will say the easiest finding for question costs that you will see on a single audit, if an auditor comes in or a state or local entity, is if they're unable to come up with a complete population, that's automatically a finding and could lead to question costs. If you have $700,000 claimed, but only $600,000 in your software, and you're unable to show the other $100,000 of costs, that would be an easy $100,000 of question costs. In terms of supporting documentation you want to maintain is you want to maintain a copy of all the award documents. So the award documents themselves may contain specific guidance outside the compliance supplement, or they may just in general give you a better idea of some additional terms and conditions that you're going to have to follow along with these awards. And it also gives you an idea of who the funding source is if you do have any sort of questions to ask later on. Specifically, as we mentioned earlier with coronavirus response fund, you can reach back out to that entity if you do have questions on anything, if it is subject to single audit. We'd recommend keeping a backup of any sort of reports you submitted to either apply for the funds or that are required to use the funds. The example here being, if you just submitted something for the September 30th deadline for provider relief, maintain a copy of the report you submitted and any sort of backup information and calculations that went into those reports. Along with those submitted reports, we'd recommend you either print out that schedule we referenced in Excel that's ancillary to your financial reporting system, or print out your trial balance and general ledger as of the date of that submission, so that if you do make subsequent adjustments, you are able to still reconcile to what was initially claimed in those federal reports. One issue we typically come into is if a report's submitted on a certain day that's not the year end, sometimes there's adjustments after the fact, and it becomes an issue trying to reconcile back to what was actually claimed. So we'd recommend always keeping a backup of what was used to claim as of that date, and then you can always identify any sort of adjustments and whether or not they were reasonable after the fact. And then finally, where we mentioned cash disbursements and payroll policies, you should keep a copy of all those approved invoices, payroll registers, and timesheets, as well as some way to formally document that they were approved to back up any costs you are claiming and allocating to any sort of federal award. So we're going to start going through the various compliance attributes now. We'll go through what it kind of means in a simplified terms. How do you know what is or what isn't subject to this compliance attribute, as well as this is the minimum expected level of internal controls we'd expect in these areas.
Okay, so for allowed or unallowed activities, the requirement is the program operates for a specific purpose that the funds provided for the program must only be used in activities that benefit that purpose. So for instance, in the provider relief fund that we mentioned earlier, the funds have to be used to prevent, prepare for, respond to COVID-19, or as income replacement for revenues lost because of COVID-19. How do you know what is allowed, unallowed? The grant awards themselves may specifically spell out what isn't allowable. As we mentioned, for provider relief funds, any costs that were reimbursed by any other program are unallowed for the provider relief funds. If it's not spelled out within the award document itself, you have to say what would a reasonable person consider an allowed cost. The expected controls James touched on earlier, invoices should be reviewed and approved to ensure they are allowable for the federal programs. Payroll is reviewed to ensure any funds allocated benefit this specific program. Allowable costs. What is the compliance requirement? The costs incurred have to be reasonable, necessary, and allocable. Reasonable, what would a prudent person might pay? Allocable, the allocation is applied consistently based on reasonable allocation that approximates the benefit to the award. Necessarily, the costs are common and accepted in the circumstances. Controls are very similar to allowable activities. Invoices are reviewed and approved to ensure the costs are reasonable, necessary, and allocable. Payroll cost charge are reviewed and approved, and the costs are reasonable, necessary, and benefit the program.
So just to go through some examples of what a question cost would look like for these different attributes. So reasonable. So in practice, one situation I was in was that an entity received funds to purchase 100 computers. Of those 100 computers, 80 were going to be used in the actual program, with 20 being used as backups. So in this situation, they purchased 100 computers as well as warranty costs on the 100 computers. So we determined it wasn't reasonable to purchase the warranty, since the program included 20 extra computers to substitute for those 80 in case of issues, and that it would not be expected that they would have a failure rate that would require them to use all those backup computers. Allocable, where you typically see findings in this area, is when an allocation is not used consistently. So one period, something made, like a telephone cost, is direct charge to one program. The next month, it's allocated to one or more programs on one basis, and then another month, it's allocated on a different basis. So with allocations, they have to be applied consistently. And then also the methodology to allocate should have some basis that makes sense, such as for telephones, the number of users versus what program they're in. So if you have 5 computers and 4 of them are used by program A, 1 of them is used by program B, an 80-20 allocation would make sense. And then necessary, where we typically see organizations get in trouble with this, is at the end of an award period. So if you have 5 days left on the award, that was a 3-year period, and all of a sudden you're purchasing large equipment with 5 days remaining on that award of a 3-year award, and it's not going to come in for another month after the award ends, it's a little hard to argue that it was necessary for the performance of the award. So here's some other questions to consider if you have something that you're trying to determine if it's an allowable cost or an activity allowable. So is it specifically prohibited by OMB rules? So some examples of this would be alcohol if it's on a food order that you're out and we're charging that to the award. Bad debts, entertainment costs, fines and penalties. This would include if you got any fines related to COVID-19 for your facilities or for your restaurant, you would not be able to claim those costs. Goods or services for personal use, any sort of costs that were incurred for lobbying. Is the cost included in the approved grant budget? That's not an end-all be-all, but if it's not in the approved grant budget, if you can't find a category for it, it may cause you to consider additional questions. Is the cost actually benefiting that project, and is the allocation supported? So if you're running a program out of one location and costs were incurred at another location, does that specifically benefit it to charge all awards or just the awards at the other location? Is the cost necessary for the performance of the award? So I like to consider this, would you actually charge this to the federal award if you were not, I guess to put it differently, so if you didn't have federal funds, would you still buy this good or service? If not, then it's hard to say it was necessary for the performance of the award if you wouldn't ordinarily purchase that good or service. Does it reflect sound business practices, and would it pass the prudent person test? So does it make sense what you're getting charged by vendors for that service? And then finally, is the cost being treated in a manner consistent with your established policies? So next attribute we'll go through is cash management. So for non-cost reimbursement, non-federal entities are expected to minimize the time elapsed between the transfer of funds and the disbursement of funds to pay those obligations. Typically, the time elapsed should be as soon as possible and not to exceed 90 days. Cost reimbursement basis, any sort of draws taken should be supported by costs paid or incurred by the organization. For costs incurred that aren't yet paid, those obligations should be paid in a timely fashion once the draw is received from the funding source. And then for any sort of advances received on funding, the organization is expected to account for the interest earned and take that into consideration for determining whether or not you had sufficient expenses on the awards. Expected controls in this area are a process in place to identify the costs that will be charged to the federal awards. As we mentioned earlier, setting up separate categories within your general ledger software or setting up an Excel sheet to track that. For costs identified that will go on to federal awards, you should have a process to minimize the time elapsed before payment is made. This could be just a general AP policy that all bills are going to be paid within 30 days unless some sort of exception applies. And then for cost reimbursement awards, there should be a policy in place to reconcile the costs that are claimed for each draw. So as I mentioned earlier, that process could include just printing out the detail from the general ledger if you maintain it by class, and each month proving out that the expenses that are on that invoice agree to what's in the general ledger. Eligibility. So there should be a process in place to ensure that program beneficiaries are eligible to receive goods or services. So depending on who determines eligibility, the control process is different. So if eligibility is determined by a federal, state, or local entity, there should be a process in place to ensure that program participants were previously approved by the federal, state, and local entity, as well as on a continuous basis as necessary. So an example of this would be a program under HUD where a person is deemed to be eligible by the state organization or a local organization to receive that rent. You should get a copy of that approval that they are allowed to participate in the program. And typically these sort of approvals are good for a yearly basis or until facts and circumstances change. So you would have to have a policy in place to renew that approval on a yearly basis if that was the case. If your entity is actually determining eligibility, you should have a process in place to ensure that the participants are eligible to receive those goods or services and a way to maintain the documentation to support the eligibility. This could include, again, going back to the HUD example, maintaining something that shows their income, whether it's going through some sort of database that verifies the income and Social Security and reperforming the eligibility calculation, and then maintaining a personnel file or tenant file for each person in the program that documents, here's what we did to determine the eligibility, and here's the documentation that supports it. Equipment and real property management. So this is typical on local government and state government, as well as on your research and development grants. You would see money received to purchase equipment or real property. So there should be processes in place to ensure that property and equipment are actually tracked, especially who paid for what federal funding agency. This process should include maintaining a fixed asset schedule along with doing an actual physical inventory of fixed assets to ensure that they are still there at the end of the year. They haven't been stolen or destroyed. Fixed assets should be properly maintained by the organization. And then for equipment that is purchased with federal funds, you should receive proper approval before you dispose of that equipment, or if you intend to use it for a purpose other than what it was originally approved for. Expected controls would be that fixed asset ledger being maintained at least an annual basis. Someone should be looking at the physical inventory of property and equipment, make sure everything's still there and that it is in working order. Maintenance records should be maintained for large pieces of equipment to support that you are maintaining it. And finally, for any sort of disposals or use of equipment in ways other than the initial approval, you should get the approval from the funding agency as well as maintain that approval. Matching, level of effort, and earmarking. So matching, for funds received with the matching required, an entity is going to be required to receive funds that produce an adequate match, whether it's on a cash or non-cash basis. For level of effort, entities are required to maintain a minimal level of effort as spelled out within an award, such as a specific number of meals expected to be served to a designated program recipient. And then earmarking would be a situation where a award spells out a limit or percentage of a program's assistance that must be spent at a minimum or maybe used at a maximum for a specific activity. So expected controls here for matching would be that there's a process in place to track that the appropriate match has taken place, that any costs you're going to utilize for the match are appropriate. For level of effort, there should be a process in place to appropriately track what services are being provided and who they're being provided to, as well as to track that it is being properly reviewed and approved to ensure that the level of effort reported is correct. And then for earmarking, it should be similar to level of effort in that there should be a process in place to review that the program is operating within the constraints of the established budget. So period of performance, a summary of this one, our costs are expended or incurred within the award period. And then for any costs incurred prior to the end of the award period, the obligations are liquidated within a reasonable time period, typically no later than 90 days, and that any sort of pre-award costs are properly approved by the funding agency prior to being charged. So for provider relief funds, the agency is giving a blanket pre-award costs going back to January 1st on any funds received. But in a typical scenario, usually pre-award costs must be approved to be spent for any expenses incurred prior to receiving those funds. Expected controls would be that invoices and payroll charged are reviewed and approved to ensure that they are within that approved period of performance, and that there should be a process in place to ensure that all items charged to award at the end of the period are liquidated within that reasonable time period. Procurement, suspension, and debarment. So for this attribute, it's expected that the organization have an established procurement policy for the purchase of goods and services. It should be formally in writing. Same thing with within that established procurement policy, you should have something to specifically stated that you're going to only engage in transactions that are outside of a conflict of interest. And then finally, you should not be entering into any purchase of goods or services from a vendor that is suspended or debarred by the federal government or a state government from actually having their own awards. So expected controls here would be that you have that procurement policy and that you're formally documenting that you adhere to that policy, which would include keeping copies of bids. And if you don't select the lowest vendor, kind of coming up with formal documentation of what criteria you use to avoid using the lowest vendor in that situation. That conflict of interest policy should be in place and you should avoid engaging in those transactions. And finally, there should be a process in place to review the federal system for award management or that sam.gov website to ensure that a vendor is not suspended or debarred. At a minimum, you should look at this anytime you enter into a transaction with a new vendor, and then it should be renewed on an annual basis. You should review your vendor list to ensure that those vendors are still allowed to be charged to a federal or state award. Some states, such as Jersey, have their own additional list of vendors that supplements the federal listing. And then, again, that sam.gov is the one for the federal agencies to review if those vendors are suspended or debarred. Program income. So this compliance attribute looks at whether or not entities receiving funds from participants for program goods or services offset the income against the cost charged to the awarding agency. So we'd expect to see two controls in this area, that you have controls in place to ensure that the program participants are being properly charged for the goods and services, and that there's some way that the organization is also ensuring that program participants pay for the program goods and services. So one area where we sometimes see question costs here is that the organization's great at calculating that the different program participants, here's what they have to pay for the program, but there's nothing in place to actually go after the money and get people to pay for the program services. So since it's not collected, they're not offsetting the program income for that. So that would be question costs, that there's nothing to really enforce payment of the bill sent out, and that there should also be a process in place to reconcile the costs charged to the awarding agency versus the cost that you're going to offset what was charged to the awarding agency for program income. Again, this is something you may see within the general ledger software or within the Excel spreadsheet that shows here's the source costs, here's everything that's allocated to that program, here's what we've received for program income, here's the bottom line, here's what we said should have been charged, and here's what was actually charged. And there should be some sort of way to reconcile and prove that those two agree.
Okay, reporting. So what is this compliance attribute? Organization files all required program and financial reports to the funding agencies. The reports are submitted to funding agencies and supported by appropriate documentation. So what the auditor is going to look for is not only were the financial reports submitted, but were they submitted timely? And were they accurately documented and supported? So the expected controls are in place to ensure that the reports are submitted timely and that the reports are submitted to the funding agencies, that they are reviewed and approved for accuracy by the appropriate individual at the organization.
Some programs require us to look at not just financial reports, but also programmatic reports. So that's when we say the appropriate individual. It may not make sense for an accounting person to say for a program report that the different things reported within that was accurate. Potentially that should be someone on the program level making that certification. So that's what we mean by appropriate individual for this attribute.
Right, might not be the same individual for all programs.
Subrecipient monitoring. So this compliance attribute is whether or not the organization is reviewing to ensure that subrecipients on federal awards undergo required audits and that they're properly spending funds and operating the programs in line with expectations. So what this means is there's a couple expected controls here. First and foremost, an organization should have a process in place to review that any subrecipients undergo that required audit. On top of reviewing that required audits are done, you should take a look at that audit report and see if there were any identified audit issues, or if they did not undergo that required audit, why they did not undergo that required audit. So if you're taking a look at a subrecipient and you see a whole bunch of question costs and internal control issues, there's the potential that you as the entity that should have been doing the monitoring could have question costs on your end, or that you may need to take additional steps to potentially no longer have additional contract terms with that subrecipient if you notice that they're not following the terms of the program. And that you should have also a process in place not to ensure just financial objectives are being met, but also programmatic objectives. So a good example of this situation would be if you have a research and development grant and you have a subrecipient on that, to ensure that they're actually doing some of the expected research and development work on a programmatic level.
Special tests and provisions. So this compliance attribute is unique to each program. Each program may or may not have special tests and provisions that are required. The items or special tests and provisions are typically based on items previously identified to the auditees and are requirements within the award terms and conditions. So one of the initial controls that James mentioned was keeping a copy of your award letter, of your award agreement. If there are any special tests or provisions, that should be spelled out within the award agreement. And in addition, if it's an award or a federal program covered in a compliance supplement, it will be listed in there as well.
So at the end of the single audit, you'll see a schedule of findings and question costs, as well as a finding of schedule of prior year findings. So here it kind of gives an idea of a general summary of what the audit had as a reporting. So to point out, the first step here is the type of audit report being issued. So whether it's unmodified, qualified, adverse, or disclaimer of opinion. So for this example, it's unmodified. If you were doing a desk review as for subrecipient monitoring and you saw this was a qualified, adverse, or disclaimer of opinion, that may lead you to have more questions to ensure that the entity properly spent the funds. The next piece here is whether or not there's any findings for internal controls over financial reporting, specifically whether any material weaknesses were identified, any significant deficiencies, or any non-compliance. The next portion here is on the federal award level of whether or not there are any internal controls issues over the major programs, such as material weaknesses or significant deficiencies that are required to be reported. And then finally, the type of report being issued for the major program of whether or not it's unmodified, qualified, adverse, or disclaimer. If you do see some sort of opinion that's not unmodified and you're doing a desk review, that would lead to additional questions. Here is the question of whether or not there's any sort of audit findings that would be required to be reported in accordance with uniform guidance. So for this example, we said yes, just to give an example of what a finding would look like. Here you would list out what was identified as your major programs by assistance listing or CFDA number and the name of that particular federal program. The dollar threshold used to distinguish between type A and type B programs. Traditionally, you would see $750,000 here, but it could be more or less depending on the circumstances. Whether or not the auditee qualifies as a low-risk auditee. So any first-time auditees are automatically considered to not be low risk. In order to be a low-risk entity, you first have to undergo 2 consecutive single audits that are submitted timely as the first requirement. And then the second requirement is there's no significant question costs or findings within those reports.
So James, for the organizations that are undergoing a single audit for the first time, and if they have to do it next year as well, there's no way they can be a low risk auditee, correct?
Correct. They'll automatically be listed as a high risk auditee. That doesn't really affect the entity itself. That affects the auditor in terms of what they have to test. So for a low-risk auditee, an audit firm has to get coverage of 20% of your federal awards. So if you look at that schedule of expenditure of federal awards, if you have $1 million of funding, the auditor has to test enough awards to get $200,000 of coverage for a low-risk auditee. And if you are a high-risk auditee, the minimum coverage would be $400,000.
Twice the work.
Yes. Here would be section 2, any findings related to the financial statements. So this would be any issues on the internal controls over financial reporting. Section 3 would be if you have a finding that is based on internal controls over compliance. So here we kind of gave an example of what a finding would look like if costs weren't properly allocated. You list out by a reference number. So traditionally you see the year of the finding dash the number of findings. So in this example, audit would be for 2020, and this is the first finding, so 2020-001. The conditions that led to the finding, any sort of question costs associated with that finding, whether it's a known question cost or an estimated question cost, what caused that finding, the effect of that finding, and the auditor's recommendation. Also included with any finding is management's response to that finding that's unaudited and would accompany any finding. And then you'd also be responsible for preparing a corrective action plan. The corrective action plan for any findings has to include what actions being taken to address the finding, who at the organization is responsible for taking that action, and what the time period you expect to complete the correction would be. And those are at a minimum high level. And then for any preceding audits, you'll see here section 4, you would have a schedule of prior year findings that would have to be audited by the audit firm as well to ensure that the auditee took the appropriate steps in accordance with that corrective action plan to correct any issues that were identified. So I guess just as a reminder, we will be emailing out copies of the slideshow as well as a link to the compliance supplement after this presentation. If we don't answer your question now, if you have any questions after the fact, please email our email at cares@brinkersimpson.com, and we'll be happy to help you with any sort of questions, as well as visit our brinkersimpsoncares.com for updated information, as well as follow us on LinkedIn. Again, we're going to look at the question and answer box. If you put any questions in the chat box, please put them in the question and answer box, and we'll go through those now to start looking at the questions.
And also a link to the recording of this webinar will be posted on cares@brinkersimpson.com. So if anyone wants to re-listen. So we're going to move on to the questions. And the first question is, if we receive a grant from our county that are pass-through dollars from the Fed, are these funds included in the amount of federal dollars received?
Yes. So when you get pass-through dollars, they will identify a portion that is federal, state, and county funds. Traditionally, most pass-through all have a percentage that's from each different agency. So when we mentioned matching earlier, the federal government may have $100 for these programs, with the state expected to contribute $50. So on your CFA, what you would do is you send out a confirmation to your awarding agency and have them tell you how much of those funds were to each program, or within the award document, sometimes some agencies are good at upfront saying, here's your $150,000 budget, $100,000 is required to be reported as federal funds, and $50,000 would be required to be listed as state funds.
Right. What we're finding is we're having the client go back to the funding agency and have the funding agency in writing provide what percentage is federal, state, and local funding. So in slide 12, would we then be the subrecipient?
Under that situation, yes. Any sort of pass-through funding, you're a subrecipient. The only time you have to make that determination of whether or not you're a subrecipient or beneficiary is on that one specific COVID-19 program. There are some carve-outs under the uniform guidance in terms of whether you are a subrecipient or a contractor. Traditionally, if you're a not-for-profit, 9 times out of 10, you are advancing the directive of that program, so you are a subrecipient. The only time where it would not be included on the CFA is if you're a contractor. Where I've seen this is if you get funding to support an objective that is some sort of research and development. Sometimes you'll get money to support them for that research, but in most cases, you would be considered a subrecipient.
Okay, do we know if the ERC wages are excluded from other programs for assigning costs, or if it's just the credit received, 100% of wage costs versus 50% or 70%?
So based on my understanding, so we'll take it from the example of Q1 2021, where you have $10,000 of eligible wages, 70% of those can be claimed. So that actual $10,000 would be what you would have to exclude from charging the program, not just the $7,000 credit.
Right.
So everything goes into that ERTC bucket for reimbursement in that situation.
Sorry, do we expect for RFF and SVOG are subject that their inventory alcohol would be included allowable?
So in that situation, it's not alcohol that you're purchasing as part of a meal.
Right.
So we'd expect that to be cost of goods sold and would be an includable expense.
Right, so the alcohol that would be excluded would be, as James said, if it was meals and entertainment, if perhaps your organization was having a meeting to discuss the program or to plan for the program, if there were alcohol as part of that meal, that would be excluded, but possibly the meal costs would be allowable for the program.
Okay, back to the first question. Okay, so in the situation where you got pass-through funds from the county, it would be expected that in that situation, you would be a subrecipient that would be required to report it on the CFA unless it's a specific carve-out where you are a independent contractor on the award. Traditionally, your the auditee can consult with their auditor if they have any questions on whether or not to include it, but in most cases for not-for-profit entities, you would be considered a subrecipient that has to report it on the CFA.
Okay, I think that might be our last question. It is our last question. Okay, again, if you have any additional questions, please feel free to email either James or myself or email Brinker Simpson at cares@brinkersimpson.com. Thanks today for attending, and thank you to Lauren Contino, our producer, and I hope everybody stays healthy and safe.
All right, thank you, everyone.
Thank you.